Alright everyone, Cowboy Trades here, welcome back to the channel for another TA update on Bitcoin. It feels good to be back to the regularly scheduled programming. I'm going to be getting more frequent updates out for the next week or so. Before we do start the video, I would just like to say, thank you for sitting on the sidelines and waiting for me. I have been away for the past week or so. I have been fighting in a kendo competition. If you do want to watch, some of my clips from some of my fights, then be sure to head over to Twitter. My Twitter at 618_cowboy. And also, before we do jump back into the regularly scheduled programming, of course there's going to be some times, as you do know, people of the channel who've been watching me for a while know that I compete in kendo. If you do want updates from me, if you want posts, videos, if you want to talk to me while I'm away from the channel, be sure to follow me over on Twitter. And also the best place to ask me questions and stuff while I am away from the markets is my Discord. So if you want to come and follow me over on there, if you want to come and join the community, be sure to head over to my YouTube page, click on about, and you can see my Twitter, Discord, Instagram, all of that good stuff is linked down below. So like I said, it feels good to be back. There's a lot to talk about. I've already got an on-chain metrics update scheduled for you tomorrow, as I'm going to be away again. But for today, let's dive into a lot of quick charts that I do want to update you on, really focusing on this death cross on the weekly time frame that is looming right around the corner. Now, I did just make a video as well talking about the revised CPI. I talked about, the CPI numbers coming in hotter than the original numbers. We also talked about Fed commentary, all that good stuff. So if you haven't already, be sure to check out this previous video. But now let's dive into some equity market charts, bond market charts, and we'll wrap up the video with what is happening on Bitcoin. And tomorrow you can enjoy the on-chain metrics update. So starting off on the 4-hour time frame for the S&P 500. Now, coming into the end of the trading week last week, it looks like we have finally started to lose this uptrending line of support. We've flipped beneath this, and on the 4-hour time frame you can see the EMA ribbons are getting extremely tight and they are looking to flip bearish coming into Monday. If you did watch my previous video, you know that the CPI numbers for the year of 2022 just got revised, and the last 3 months worth of CPI numbers are actually being revised at higher valuations than previously promised. So of course recently the markets have been enjoying inflation coming to the downside. They've been enjoying the Fed having a slightly more dovish perspective over the hawkish perspective, and of course now we're seeing CPI actually coming in hotter than expected. It is looking like, and also bear in mind, this information came in at the apex of the trading week, so the markets have not had time to react to what is going on at this moment in time. So coming into Monday's opening, it's going to be very, very interesting for the S&P 500. If we do start coming up to 4,115, 4,120 and starting to break to the downside on the E-mini futures, it is going to be looking like that's the nail in the coffin for that next move back down to the downside. Now, I briefly talked about the US government bond 10-year yields in my previous video, but just to let you know, you can see on the weekly time frame we are breaking to the upside of this bull flag, and it's looking like, in my opinion, a price target up here at the 1.236 Fibonacci swing extension, round about a rate of 4.5%, is going to be coming into fruition very, very soon. So while the 10-year government bonds are breaking out, bear in mind these trade inversely to your S&P 500. So if you continue seeing government bonds break to the upside, once again you can see this peak in the S&P 500 was basically marked by the lows of the 10-year government bonds. We broke to the upside, we've been lollygagging, and while we've been lollygagging in this bear flag, the markets have been having a little bit of a bounce to the upside. If we do get this continuation out for the 10-year bonds, especially now we've got this new information coming out, we've got new Fed commentary coming out, now we've had inflation, we've had the CPI inflation numbers revised. It's looking like this could be a very, very bullish week for government bonds and a very bearish week for the equity market. So once again, this peak over here in the S&P 500 was basically the start of this rally for the government bonds. If we're starting to see us break out for the 10-year yields, then this peak that we've seen in the S&P 500 might be the top before we start breaking down. Now, while the 10-year is only just poking its head above the bull flag, you can see if we do come over to the US 2-year bonds, the 2-year is outperforming the 10. And veterans of the channel will also know what this means for the 10-2. But just looking at the US 2-year yields, you can see that we are exploding to the upside of this bull flag at this moment in time. Once again, I do have a target up here at the 1.236 extension, correlating to about a 5.1% 4% rate for the US 2-year bonds, or about a 12 to 13% increase from where we are right now. And if we are looking for the US government bonds on the 10-year yield, you can see that this would actually be about a 22% increase. So it's going to be very, very interesting. And because of this, because we're seeing the 10-year breakout, which is obviously bearish for the equity markets and bearish for crypto, we're seeing the 2-year explode to the upside. And this is meaning that when we get the valuation of the US 10-year and minus the US 2-year valuation, this is a key way to look at when financial conditions are going to pivot in the market, because the 2-year always pivots before the 10-year. So when we're looking at the US 10 minus 2, the 2 is outperforming the 10, meaning you've got more to subtract from the 10-year valuation, meaning, you know, we're going to continue breaking down to the downside in this. And why this is important, I've made an educational video about the 10 minus 2. If you want to learn more about it, I don't have time to fundamentally explain the 10 minus 2 right now. If you want to learn more about it, be sure to head over to my YouTube, click on the playlist, find my educational series, and you will be able to go out and see my, my thoughts on the US 10 minus 2. But all in all you really need to know from a technical perspective is, if we are looking at this chart, you can very much see that the US 10 minus 2 trades the same as the S&P 500. So, you know, while the 10 minus 2 has been breaking to the downside, so has the S&P 500. And when this is in periods of growth, when this is pushing up and up and up and up, the S&P 500 generally follows what the 10 minus 2 is doing. Now, also on the channel recently, we talked, I believe it was in the last equity market video, if I come back, it was round about here. I believe it was 12 days ago, maybe a week or two ago. But we talked about this correlation between the VIX and the VVIX. We all know what the VIX is, the volatility index for the S&P 500. The VVIX basically measures the volatility for the VIX. And we talked about the fact that, you know, the other week, the VVIX was running up very, very quickly ahead of the VIX. And it seems like these have started to snap back into correlation. So the VVIX is heading up very quickly, and it seems like the VIX is starting to play catch up. Of course, as we all know on the channel, these are inversely correlated to your equity markets and crypto. So the more the VIX pushes up, the more the VVIX pushes up to the upside. This might be a sign that, once again, that is the nail in the coffin for the equity markets. Also, the CBOE Implied Correlation Index, this is finally finding a level of support over here. This is something which again is inversely correlated to the equity market. So a lot of the times you can see over on the implied correlation index, you can see huge blow off tops right here on the CBOE implied correlation. You can see this marked the bottom of the March 2020 scare. You can see over here there was a bottom found where we established a new trend line all the way down here, and we had a huge run up to the upside, and this basically marked the top for the S&P 500. Since then, you can also see there was quite recently a huge run up in the CBOE, and this marked the bottom over here before we had a rally for the past, month or two. This is what really happened when the correlation index had a spike. The equity markets bottomed and went for a rally for a month or two. But now we're putting in our first month in the green. We are having a very, very healthy buyback right now, finding, support round about this trend line. You can draw this a few different ways. If I'm drawing this from this candle body close and this candle body close, you can probably see this matches up a little bit better. But on the weekly, we're bouncing back very, very strongly with a bullish engulfing candle to close off the week. And after this, you can see, this big spike in the implied correlation index. Looks like this is also another reason why the S&P 500 may have topped out. The TIP, Treasury Inflationary Protected Securities, this has also moved back down into the bear flag. We talked about the correlation between this bear flag and this bear flag. The only real difference is, when we formed this bear flag, we had one liquidity grab, we had one failed move equals a fast move in the opposite direction. Over here, we had a failed move equals a fast move in the opposite direction, and then we pushed up and had another failed move with a lower high, and it looks like we are forming an M pattern right now on the TIP ETF. Bear in mind, the TIP ETF, as we've discussed on the channel many times before, I'm hoping you veterans remember this, but this is a leading indicator for the rest of the markets. As you can see over here, the TIP ETF broke down into new bear market lows in the month of August, literally coming into September, and you can see the S&P 500 actually bounced when this was breaking down into new lows, but then as the TIP ETF continued to break back down to the downside, your S&P 500 and of course your cryptocurrency markets came back down and formed those September lows. So the TIP ETF keeps on breaking down, you're going to know that the S&P 500 and also your cryptocurrency markets are soon going to follow. Now let's move on to some Bitcoin charts before we do wrap up the video. Like I said at the start of the video, there's a lot of charts that I wanted to run through today, and I also originally wanted to talk about a lot of on-chain metrics in this video, but I just thought this was going to take too long, especially if I cover the on-chain. So what I've done is I've pre-recorded the on-chain segment. I'm going to upload that for you tomorrow on Sunday while I do have plans, and then I'm going to be back, at some point, maybe on Monday, making more content for you, definitely getting some altcoin updates out, because I know, with this KDA trade moving into profit, I definitely want to get an update out for, some of your Solanas, your KDAs, your Gala games. But nonetheless, Bitcoin. There is a very, very important week coming in for Bitcoin, besides all of the things that we've just talked about, with, new Fed commentary, new CPI numbers, all of these different charts we've talked about for the stock market being very important, and all of these reasons tying in why I believe the stock market's going to break down. Let's also talk about why, Bitcoin itself might break down without the help of the equity market. So right now, this is the most important chart you could possibly look at. Just these three lines alone, these two moving averages and this macro trend line, are pretty much, all you really need to focus on right now. The higher time frames are really what you should be focusing on, not the lower time frames. So when we are looking at this, you can see we are looking at the 50-week moving average here in gold or yellow, orange, whatever you want to see it as, and the 200-week moving average here in blue. Let me delete this trend line very quickly. What these are, your 50-week and your 200-week, you use these moving averages, or not necessarily week, your 50 and your 200 moving average. These will tell you when there's a golden cross and a death cross. Now, however, on the weekly time frame, we have never ever had a golden cross, and we've never had a death cross. We've had many of them on the daily time frame. We've never had one of these on the weekly time frame. We came very close to crossing bearish on November the 15th. However, we're literally pressing into this right now, and because this is a weekly moving average, the 50-week moving average, this is taking in data points from 50 weeks ago, and 50 weeks ago Bitcoin was trading at 42,000 on the lows, 34,000 on the highs, 48,000, even moves here 25,000, 32,000. In general, we're taking in data points on this moving average from much higher price targets, like, almost $50,000. We're taking in these data points, these price targets, and right now Bitcoin's getting rejected from the long-term moving average and starting to move back down to the downside. So the only way that this death cross is not going to happen is for literally in the next few days for Bitcoin to start pumping to, $500,000, and it sounds ridiculous, but there is no other way to save the death cross. For example, Bitcoin could literally pump up to $150,000 tomorrow, but we're still going to be taking in all of these data points higher than this one data point we'd have from this huge run to the upside. So there is really nothing we can do to stop this death cross at this moment in time. I do think this weekly death cross is going to bring a lot of fear into the markets. I think retail is going to be very terrified of this market situation, and I think whales and smart money are going to use leverage, futures contracts to take advantage of the fear, short the market. Retail is going to panic, retail is going to sell, and this is going to cause the next major move back down to the downside. So definitely not looking good for Bitcoin right now, with this death cross literally looming. And if I do pull back up the original trend line that I did also want to talk about very momentarily, you can literally see how close these are getting to cross. If we extrapolate this, you can really see, I don't know why my trading view doesn't want to draw a line like this, but you can see something like this by roundabouts, literally in the next few days, this should be crossing bearish. So maybe this crosses bearish on Monday, maybe this crosses bearish on Friday, but next week I do believe that this is going to start crossing back bearish. And why this is so imperative is that, if we do come over, once again, looking at this macro trend line, perhaps the most important trend line Bitcoin has right now, you can see, rejection from the bear market top, rejection. And right now, we've broken above this trend line and we're coming back for a back test. And we are literally, as of the time of recording on the weekly time frame, we're technically trading just underneath the trend line. But, this is a huge trend line. I'll give it the benefit of the doubt and say we are more or less sitting on this trend line at this moment in time, getting ready to make a decision. However, on the weekly time frame, while we are beneath the trend line, on the daily time frame, you can actually see that we are literally kind of just sitting on it and holding it as support. So 21,500, and coming into next week around about 21,400, but really 21,500. If you are a bull, you would want to see this hold and you would want to see a bounce. If we start breaking back beneath this trend line, this is going to be what I call on the channel all the time a failed move equals a fast move in the opposite direction. If we do not come back and back test this and go back up to the upside very, very soon, this is going to be a failed move equals a fast move in the opposite direction. And, you know, I drew a line like this just to, you know, give you the point of the matter. I think I drew it very, very low, but something like this is probably what's going to happen for Bitcoin if we do not hold this trend line. Now, zooming into some slightly sooner time frames, looking at the weekly time frame, like I said, right now I can't emphasize this enough. We can look at lower time frames, we can look at Elliott wave theory, we can look at, you know, momentum indicators, oscillators on the daily time frame, but this is the most important chart that you should be looking at for Bitcoin right now. This death cross and how we react to 21,500, this macro trend line, is super, super important. But if we do come over to the weekly time frame, looking at the Heikin-Ashis, looking at the most recent macro swing high up here at 25,200, you can see we are at this moment in time, it looks like, well, at least in my opinion, it looks like we are having a rolling over top or a rounding top, whatever you want to call it. This also looks like this could be a nasty bar pattern before we do break back down into new lows where the base of the bar is, around about 16,700. But more importantly, on the Heikin-Ashi candles, on the weekly, we are putting in a red doji candle signaling indecision while we are beneath this 25,000 macro high. So it looks like we're putting in a lower high in my opinion, rounding top, Bart Simpson pattern. You can also see if we are drawing this fib, we are stuck in the golden Fibonacci ratio right now, the 786 Fibonacci, the 618, and of course the 0.5 fib. Most people call the golden fib ratio, you know, the 786 and the 618. I prefer to encompass the 0.5 up to the 786. I think all of these are very, very important. And as you can see on the Heikin-Ashis, we've come up to the 786, got rejected, 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 and we are moving back down to the downside. On the regular candlesticks, we did poke our head above this, had a failed move above the 786, and it looks like we are putting in a nasty, nasty bearish engulfing candle at this moment in time. And once again, you can see this a lot clearer on the weekly Japanese candlesticks, that we are putting in a Bart pattern looking like we want to break back down to the downside. Total cryptocurrency market cap is moving very similarly. You can see from the top here, you've got a high, macro lower high, macro lower high, macro lower high, and this green box here also correlates to a huge area of liquidity. We broke down into new lows back in November, found support of the 786 Fibonacci, bounced up, grabbed liquidity, and now it's looking like we're getting ready to head down. Basically the same picture over here on the total 2, which is the altcoin market cap. You can see, you know, the all-time high, macro lower high, macro lower high, macro lower high, macro lower high. As we broke down, didn't quite make new lows. We basically back tested the lows from June. For the altcoin market cap, you can see we came back down here, and what did we do? We bounced back up into this green box where the VPVR liquidity is, just like over on the total crypto. So Bitcoin as well, we've come up and grabbed liquidity since we broke down into new lows. You can see we blasted through the VPVR, which were the range lows around about 19,000. I say range lows, 17,600 were the range lows, but all the candle body closes, all of the volume traded was around here at 19,000. We pushed up above this, and where did we push up to? We pushed up to the next volume profile, and really, as you can see, this starts to taper off to the upside. So in my opinion, it's very, very unlikely that we clear this 24,300 level. I do believe very strongly that we are starting to top out, which is why, if you have been watching the channel, you know that I am currently positioned in a KDA trade, and I will be looking at how the markets respond and react to this trend line for Bitcoin and react to the death cross in this coming week. There could be a lot of beautiful short positions getting ready to play out, but for right now, I'm observing how we react to this trend line and very happy to sit in this KDA short. Bitcoin is grabbing liquidity, and also wrapping up the video on the oscillators on the weekly time frame, they are so overextended. The squeeze momentum indicator is in a bear market, but it is pushing into light green. The last times that we were pushing into light green, you can see we're all the way up here, 69,000 top, 65,000 top. MFI, looking at the money flow index, you can see once again rough trend line here. You know, we did slightly touch our head above this, and we started to break back down. MFI is breaking beneath this trend line. It's rejected from this trend line as well, making a lower high from here, and a lower high from here. Money flow index is so overextended right now. The volume in the market is so overextended right now. Liquidity conditions are very overextended right now, and on the weekly time frame as well. For the cherry on the top of the cake, you can also see the stochastic RSI pushed all the way up to 100 and has just put in a bearish cross. So all in all, once again, the main takeaway from this is the charts that I posted for the equity markets. You know, US government bonds are pushing up. That's very important. For Bitcoin, you can basically discount a lot of the other charts. This is the most important one right now. This death cross which is looming, and how Bitcoin responds to 21,500 is very, very important. So for today, my friends, that's all I've got. Like I said, tomorrow I will have this on-chain metrics update scheduled for you to release. And also, once again, I'd like to say thank you for sitting on the sidelines and waiting for me while I have been, you know, training, fighting in a kendo competition. Just needed to take a little bit of time to recover. But like I said, a lot of the time, and you know, a lot of the time for the rest of the year, I'm going to be competing in a lot of these tournaments. So the best time when I am away from the markets for you to, you know, get more posts from me, more charts, more memes, more economic data, or even if you just want to pop into the community, ask me a question, talk to the community, the best place to do that is over on my Discord and my Twitter. So hope to see you over there, my friends. But for today, that's all I've got. Like I said, be sure to follow me over on Twitter. Be sure to come and join the community over on Discord. If you enjoy the content, as always, my friends, make sure to let me know by leaving a like and a comment. Share the videos with your friends. For today, that's all I've got. See you tomorrow. Cowboy out. Peace.